You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster GIOVINAZZI from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by NASDAQ. From its inception, NASDAQ has been an innovator and agent of change in the financial markets. It's in our DNA. From the development of electronic trading to our drive to bring enhanced functionality and world-leading technology to our suite of 6 options exchanges, we exemplify customer focus, consistent technology, and streamlined solutions. Now NASDAQ is proud to launch the NASDAQ 100 Volatility Index, ticker symbol VOLQ, to its suite of exchange indexes. VolQ uses only at-the-money options to provide a precise measure of NASDAQ 100 volatility. Learn more about this exciting new volatility product at www.nasdaq.com/VOLQ. NASDAQ, leading the U.S. options market and continually rewriting tomorrow. And now, get ready to hit the Option Block.
All right, everybody. That music can mean only one thing. We are kicking off our broadcast week here on the Options Insider Radio Network. A busy week. A lot in store for us. Hopefully you guys have signed up to participate and join us live tomorrow night, Tuesday night, for our live election night special starting at 6 p.m. and going till whenever. We have no idea. Should have a cavalcade of great guest stars joining us throughout the night. If you're tired of all the talking heads spewing political nonsense, don't worry, we're not going to do that. We're just going to talk markets and the impact that these returns are having on said markets. So if you haven't done so already, make sure you clear your calendar, get ready to join us starting at 6 p.m. Central tomorrow night. It's usually by the Mixler link. We'll see if we can get it out by a few other live venues as well. Should be a fun time for all. And of course, speaking of fun, if you guys are having fun listening to this network, make sure you leave those reviews in your platform of choice so new folks can continue to discover this program. And indeed, this network has been an explosive year for a lot of retail discovering the options market in particular. We've seen a lot of them discovering this network. So if you want to keep that flow coming, if you like what you hear, keep those reviews coming. Keep those questions coming, too. We do have to hear from you guys. And before we get to who we're hearing from on the show today, let's kick it off with, I think it's got to be many of yours, new favorite segment that we do here on the show. We kick off the week a little bit different. To get our engines running, we go back in time here and see if we can guess that 80s theme song. So without further ado, here we go. This one was submitted by the Joe and Linda duo. And I got to admit, Mr. Rock Lobster, this one was aimed squarely at you, and they're not being kind. This is a deep cut. Let's just put it that way. All right, here we go. Can you name that tune? That's a good one. That's a deep cut. I had thought about that one. I had considered that one earlier. Then I kind of thought, well, that one's super hard for a couple of reasons. A, it's a deep cut. B, that's one of the rare shows that changed its theme song every year. So that's one of the later ones, make it a little bit more, maybe more recognizable for you. But either way, that's a challenging one. Mr. Rock Lobster, this was submitted directly for you to kind of stump you. So let's see if they have succeeded. A, Mr. Rock Lobster from the optionpit.com, welcome back to the show. And B, can you name that tune, sir?
I'll tell you what, the pressure of these things are just killing me every week, you know. I thought trading was hard, but guessing these 80s theme songs is much, much more difficult. You know what? I'm going to take a stab and just say MacGyver.
Not a bad guess. Not a bad guess, but unfortunately, no, sir. That is not correct. Once again, I forgot. I'll have to go back. I'm sure someone has been keeping track of exactly how many you have missed now, but you are 0 for quite a few. We'll see. I even gave you the one I thought was going to get it for you, and you missed that one. All right, now let's turn to the NASDAQ hot seat where we're welcoming on Mr. James McDonald, the CEO and Chief Investment Officer over there at Hercules Investments. James, A, welcome to the option block, and B, can you name that tune, sir?
Thank you so much. I don't know what show that was, but I know for sure it was on at the same time Magnum PI was. That's Magnum PI competition music right there.
You're right. That does have a whiff of Magnum to it. Well done, sir. And really quickly, James, I know you were just on Volatility Views not too long ago, but obviously a different program, a little bit of a different audience. Real quick, give them a quick overview of what it is you guys do and what you guys trade over there at Hercules Investments, sir.
Sure. I'm a football player first and foremost, and from the time I stepped on the field 11 years old, I knew I wanted to be an NFL player, and it didn't work out, and so I'm going to buy an NFL team, and they're about $2.5 billion, and there are a few ways to make that kind of money. Options is one of them. I started Hercules Investments last year to generate about $12 billion in profits for clients, which would net me enough to buy my NFL franchise, and that is our focus here, trading index options, and we are doing a wonderful job. We just won the Alternative Manager of the Year from wealthmanagement.com, and we've traded over $3 billion in options so far in 2020, so we're well on our way to getting me my team, making a lot of money for clients.
Interesting. You don't have such a specific goal usually with money managers out there. I like that. And you know who else might like that? Our third co-host, Mr. Uncle Mike, who spent a little time in the NFL himself, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. A, welcome back to the show. B, what do you think of James's investment goal? Maybe you want to join him on that. And then C, most importantly, can you name that tune, sir?
Well, a couple things. First off, thank you. Always great to be here. James, if you get that team, if you're looking for an O-line coach, I'm your guy. I would love to do it. And then the third thing, in terms of that theme, I really have to be honest. I have no clue on this. So I'm going to go take a total flyer on here and go with a show that I've never even watched and wouldn't even know what it is. But I'm going to go with Jake and the Fat Man.
Oh, interesting guess. This is a similar theme, but no, I'll give you the exact submission. This is from the Joe and Linda duo. They said, hey, Mark, how about Hunter? I know the lobster hasn't got a shot, but this one might just stump Uncle Mike, and they were correct. It did indeed stump you. A great matchup with Fred Dreyer and Stephanie Kramer. By the way, Fred Dreyer was a pro football guy before he started in this series, played for the Rams most of his career. Thanks again for all you guys do. Joe from Joe. Oh, he's also my boy Luigi in our chat, so he's got multiple handles. So there you go. A football-oriented one for you as well, Uncle Mike, and yet not so much. A challenging one, a deep cut. Well done, Joe and Linda, as we head on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block, the portion of the show where we do just that. We break down what the heck is trading and lighting up our screens today to kick off our week here. A little bit afternoon Central Time here. And, you know, it's an interesting day. Started off mostly green, which probably surprised some people given some of the news coming out of Europe this week that England and some other countries going back into effectively full lockdown. Not usually good economic news, and yet the market started off firmly in the green. Now coming into showtime, a little bit less so. We're seeing the Dow leading the charge today, a rare day with the Dow in the lead, up about 1%. S&P up around 0.2%, and the NASDAQ actually in the red, off about 0.33%. And coming into showtime here, we saw our old friend VIX Cash not that far away from where it was on Thursday's show. It was about 37, almost in 3/4 coming into showtime. That puts it up almost a point, about 0.9 of a point from where it was this time last show. Our old friend VVIX also getting a lift, not quite as high as where it was last week on like VolView, it was around 150, but still pretty high. It's at 141. That puts it down about a handle. It actually hit a high of about 154.5 last week. So we saw some turbulence out there. VIX, of course, reached a high of nearly 41 last week, about 40.70. So interesting prints on the board. Our old friend VXX, aka the product you guys love to fade, at about 25 3/4 coming into showtime, puts it exactly unched. We were kind of talking about that in Volatility Views this week, about how kind of anemic the response to all this vol that VXX has had. Kind of interesting out there. Everyone's just fading it to high heaven. That hit a high of about 27 3/4 last week as well. And our newest addition to the program here, VolQ, a.k.a. the at-the-money volatility of the NASDAQ 100. They're at about a 37 3/4 coming into showtime. It was around unched. Then we saw this kind of turn to the dark side in NASDAQ, and now it's ticking up. That's up about 3/4 of a point from this time on Thursday's show, and it's off the high. VolQ flirted ever so briefly with the 40 handle, got up about 39.82. Didn't quite cross over there, but got pretty close. So let's start there. James, you're in our NASDAQ hot seat. So let's start. What is lighting up your tape out there in today's market, sir?
We are simply savoring the excitement we had. We took a $55 million position into UVXY a week and a half ago, and we exited that position with an enormous win. And we are excited about that because that profit base is going to fund what we believe is going to be a major, major sell-off in the market. That was just a blip. We're excited. We're trying to make $1 billion here in the next few months with these products. And we are really excited that the market stopped going straight up. It made no sense from March until September for the market to go straight up, implying the market was stronger now than it was before the pandemic. And so markets are making a lot more sense now, which makes trading a lot more lucrative. And we're excited about the overall trend of the market. We believe that the NASDAQ 100, having been the primary driver of growth, not just this year, but since the bull market started in March 2009, has got this product. We're extremely excited about it. We plan to make hundreds of millions of dollars using this tool for our clients.
Well, let's touch on that. You mentioned your last appearance on VolViews a few weeks ago. You were heavily invested. I jokingly, maybe only half jokingly, referred to you as UVXY whale. You had a lot of positions on the 10 strike in UVXY. You kind of at the time had maybe expressed some concern about that product. You didn't think it was performing the way you want. And then you said you might exit the week after that. It turns out you hung out for a little bit longer. You didn't exit, I think, until about last week. So what was it that finally turned you around that position, sir?
All that green. We were in a cost basis in the $17.5 range, and we were expecting support to come in much higher than it did. Nonetheless, we took almost $20 million profit on that position, so we were excited. We held because we knew the market was rolling over. All the signs were there. The deal wasn't signed for stimulus. Earnings were not raising the market up. This presidential election always causes volatility, and COVID is spreading. It's not getting better. It's getting worse, and so we are comfortable holding. I was angry at UVXY because I wanted to make $100 million on that contract. Nonetheless, we are ready to focus on VolQ now. We're going to say goodbye forever to UVXY and focus on VolQ here going forward.
Yeah, you mentioned that a couple of weeks ago. Even when you still had that position on, you were starting to eye VolQ. I'm kind of curious because obviously that's a big swing, a little bit different underlying. You're going to the NASDAQ now. So maybe A, why did you want to make that leap? And then B, what is it that drew you to VolQ? Was it the fact that it's at the money, doesn't mess around with things like skew? What was it that drew you away from UVXY and towards something like VolQ there, James?
It's all about purity, right? If you want to do a thing, you want to do a thing well. And what we want to do is generate profits and protection. Most portfolios in America have a ton of Apple Computer in them. It's the number one held security in every equity portfolio. It's the number one security in every equity mutual fund and ETF. And Apple is just one of the names. There are a dozen technology companies that have been extraordinarily successful, and consequently, most portfolios are overweighted with those names. Those names are also in the NASDAQ 100. And what goes up must eventually come down, even if it's a great business. And so VolQ gives us a pure, focused tool to protect investors' profits and to put profits in our growth-oriented investors' portfolio by being able to make money when the eventual tech market crash happens. And even if a tech crash doesn't happen, even if it's just a correction, we're talking about an index that's at 11,000 points. And so a 1-2% move can generate $10,000, $11,000 for a savvy investor who's got an advisor like us focusing on these things. Tech and innovation is always going to be the driver of growth. We saw it on the Jetsons. We saw it on Star Trek. We saw it 50 years ago what was coming, and it's here now. And these companies that are making the world an easier place to work and an easier place to live are in the NASDAQ 100. And so we can provide direct, pure growth opportunities and portfolio protection using it. We like VolQ on an instrument basis versus the UVXY contract because it also provides us with exposure to healthcare. It provides us with exposure to the names. We're talking about Facebook, Amazon, Apple, Microsoft, Netflix, Google. Those companies, without them, S&P would be down 3.2% year to date. We're talking about being able to provide direct exposure using this instrument. And then it gives us a very, very, very explosive opportunity as well, because we're talking about volatility. We're not talking about, we've done almost $1 billion in NASDAQ 100 put options this year, doing the same thing we're talking about. But this gives us a volatility exposure. And so with less capital, we can do more, because obviously when volatility is aligned with a big market pullback, it spikes, and that spike is explosive. We're looking at the gamma on these options, and, that's going to give us explosive upside.
And I know you like to play in the options, particularly the meaty in the money options. I know that's your go-to strategy over there, James. Do you guys, A, trade a lot of futures? And if so, B, have you started trading the VolQ futures? I know they just listed a couple of weeks ago. Have you guys started trading them yet?
We are just counting our pennies and nickels and dimes and quarters from our UVXY and positioning. We are going to implement our trades for this U.S. presidential election here in another day. And so we are queued up and ready to go. We just exited our UVXY late last week, and so we'll be ready to go. And we've been studying it, like I said, for a long time now. We're ready to go.
All right, and we're ready to go. Talk about a lot of fun things here on this program. Interesting stuff, though, out there. A lot of people interested in NASDAQ volatility. It's kind of hard to argue with them. It is inherently a volatile index. Every day we talk about it here on this program. It's typically leading the charge. Today's a rare day where the Dow is actually in the driver's seat. So it makes a lot of sense to look at some volatility on a more volatile index. I know a lot of our audience also waiting for the options. Hopefully we'll get those in early 2021. Let's go around the horn the way we went. Let's go to Mr. Rock Lobster. I know he kind of swung and missed on the 80s theme song. Maybe he can make it up, sir. What is lighting up your tape out there as we head toward probably the biggest, or looks like maybe one of the biggest vol events of the year, sir?
Yeah, I'm looking at this and I see, you know what? This vol bulge over the election has been here for how long now? 9 months? 10 months?
Since the beginning of January, it was there pretty much.
Yeah, right. So, I think there's a certain level of vol that comes out after the election. I can't see how it doesn't. Like mid-30s, maybe to mid-20s. And then we're still stuck with, we're still going to be in like zone 4, right? Higher elevated vol. And we could see the markets sell out. I think, who knows, to be honest. I think there might be some relief, but again, that's if we have a result. I can't help thinking about this Y2K thing. Like everybody was freaked out. They were freaked out. And then on January 1st or 2nd, and, we all showed up for work. Everything worked fine. So it's hard to separate the hype from what actually, from what's real. when it comes to this election. All I know is that volatility, as we use the VIX and all this other stuff, vol is pretty high. It's higher right now than it was when we had the tech wreck in 2018 in December. And we had stocks were moving back then. And we're at that level now. We're just kind of, flim-flamming around. So, you look at this and you go, well, so we're kind of, let's just say the vol is now pre-bid. And we're here at a higher level. And I think we could see some vol come in, but, the market can still move at a 25 VIX. It's still, 1.5% per day. And then we'll see what happens. So, but that's ultimately, until this election is over, what the heck are we watching, right? We got no stimulus. COVID is rampant. There's no good news. It doesn't matter what companies I think are making right now. Everything's trapped by headline news until I just think we need domino to fall as far as uncertainty. And the election is the biggest piece of uncertainty on the horizon that could actually get solved within a week. So that would be my time frame for watching VIX come in a little bit.
Well said, sir. Last but not least, Mr. Uncle Mike, sir, what is lighting up your tape out there as you and James both dream of future NFL franchisdom?
I don't know if that's really the life that I want to live anymore, quite frankly. It's a lot less painful to work as a trader, I think. But nonetheless, I guess it doesn't hurt that much if you're an owner. Then you just fire people all the time. So I guess that might be the way to go. So anyway, some things that I'm looking at this point. I talked about last week, whenever we have bonds going up in value, not the yield, commodities going higher, at least in the precious metals, and the market's going a little bit higher, the money everything can't be going up at once, so to speak. And so whenever everything is down, then the money just didn't disappear and go into people's mattresses. And then the only other major asset class that's out there that I mentioned would be real estate. And I have a hard time believing that there was that much real estate being bought last week when all of the other three major index classes the other major asset classes were going down in value. So today we have something to where there's money going into bonds, money going into at least silver anyway, and money going into the markets. Not a lot. But I wouldn't read too much into what's happening today because we are facing arguably the vol event of the century. And I say that just because of the fact that it might be totally nothing. But unless we have a landslide victor tomorrow night, I don't see any way that this thing does not drag on. I don't see any way that we have, if it's even somewhat close, I don't see Biden giving up. I don't see Trump giving up. I don't see a concession speech happening tomorrow night unless we have just a major landslide that no one could have predicted. And so with that, if we do have that landslide, I actually think the markets are going to go higher, whether it's Biden or Trump, just because of the fact that the market will have some type of certainty. If we have some type of Bush-Gore repeat, I think it's going to be a higher vol. And I also think that the markets are going to sell off. And I think it's going to be it's going to be worse than what it was in 2000. And by worse, I'm not talking about markets. I'm talking about just what's going to go on with our country, just because of the fact that Bush or Gore, they weren't that much of a difference. I mean, they were, but they weren't in that. Let's be honest. George Bush Sr. and Bill Clinton became good friends later on. I don't see that happening with Donald Trump and Joe Biden. Just because of the fact that these two are so different from one another with their policies and with everything, that if we have the uncertainty going on as to who's going to be the president, then markets have never liked uncertainty in their entire history. And this isn't something to where if it's just kind of close, one of them will do the right thing and concede for the good of the country. No, neither of them are going to do that. They're both going to fight to the bitter end on this one. So I believe that the vol event that could happen is that if we have a close election and it drags on, it's not going to be good for markets. And so I'm going to be positioning myself accordingly tomorrow, and I might be a little bit overhedged going into the election, but I don't care. I'd rather be a little bit overhedged and be a couple points behind if markets rally, as opposed to getting our face ripped in if the markets go down very significantly. So I'm over hedging a little bit. I'll talk about that a little bit more in the strategy block. But for the time being, I think it makes sense to be very careful going into this and understand that this does have the potential to be a very, very, very major event.
A major event indeed. We're going to break it all down live for you, listeners, coming up tomorrow night, so stay tuned for that. In the meantime, let's break down what's trading out there right now. Coming into this latter portion of the trading block here, we're seeing VIX doing some decent paper, about 402,000 contracts on the tape. The ADV is about a little bit less than 500,000, so it has ticked up 492,000 out there. Obviously, a little bit more paper in the vol space of late. SPY at about 2.5 million contracts. The ADV is a little bit shy of 4 right now, about 3.8 million. So SPY doing decent paper as well. The S also ticking up there, 654,000 contracts. The ADV about exactly a million out there right now. The Qs out there in NASDAQ land at about just a tick under 500,000 contracts. And the ADV is just a tick under a million, so about halfway there in NASDAQ land. And then IWM out there in small cap land at about 154,000 contracts. So not a huge day in small cap land. The ADV is about 583. Let's see what's lighting it up out there in most active single names out there today. James was just talking about these large tech names out there. Let's see how many of them are dominating our top 10 once again. Number 10 cost you 154,000 contracts to break into the top 10 today. That gets you all the way to Amazon, number 10. And then we go out to number 9, ExxonMobil, 158,000 contracts. Number 8, Hertz. Haven't seen Hertz or Exxon in the top 10 in quite some time, but Hertz there, number 8 with 160,000 contracts. Number 7, Bank of America, $1.62 on the tape. Number 6, AMD, a perennial top tenner, tends to move around a little bit at about 186,000 contracts right now. Number 5, good old Facebook, 193,000 contracts. Number 4, now we jump up a little bit to Wells Fargo, 319,000 contracts. Number 3, Tesla. Number 3, something has bumped Tesla out of the top 2. Interesting. Tesla, 407,000 contracts. Buckle up, listeners. Number 2, Apple. What? Apple's not number 1? Is that even possible anymore? Apparently it is. Apple doing a paltry 781,000 contracts. I guess that ain't enough for number 1. What has the temerity to knock Apple out of the top spot? Well, it can only be something else in the electric vehicle space. Yes, it is NIO. 905,000 contracts on the tape right now. That bad boy is moving and shaking. The stock's at about 32 3/4, up about a little over $2, about 7%. So a decent day, but for names like this, not enormous moves, and yet putting up a lot of paper out there nonetheless. Speaking of names putting up paper, this is a big week, listener. This is pretty much peak earnings. If you pay attention to earnings, I know we had a lot of names in the FANG popping off last Thursday, but in terms of the number of names that are reporting this week, most of the big ones are coming out this week. I'm looking at this chart here. They cover about 8,500 names that are reporting, and this week has about 2,250 or so. So it is far and away the busiest week of the season. Let's just highlight a few of them here that's popping off this week. Clorox today, Wingstop, if you're into what's going on the wing side of the economy, Lumber Liquidators, AMC, that's been a troubled name of late in the theater space. Tomorrow we got Wayfair and Humana. Wednesday, we got Wendy's, Hilton, Qualcomm, Upwork, and Match. We talked about Match a lot here on the show. Been a lot of line in the sand puts out there in Match. Thursday, Alibaba, GM, Square, Roku, Peloton, the name that this pandemic couldn't have helped more. Dropbox, Uber, just to name a few. Friday, we got CVS. Let's look really quickly. We've got some move reports here for today. You guys can check all these reports for yourselves completely free of charge. You know where to go, theoptionsinsider.com. And let's see. Today for the move results report, we have Clorox. They're popping off before the bell at 207 1/4. Obviously, this pandemic also been pretty good to Clorox out there. They were pricing in 5.1%. They delivered about 4.5%. So pretty close to in line with their straddle. Yeah, interesting stuff out here in terms of what we've got in the old names. Yeah, here's another one we have here. Waste Management. They were also popping off today. They were also at pretty lofty heights. 107.91. They're pricing in 3.6%, and they moved about 2.8%. So a little light out there as well. We have a bunch of other names popping up later on today, including PayPal after the bell today. They were at 186.13 as of this report. They were pricing in $15.19. In the past, they moved less than $10. So this thing's pricing in some juice. Maybe the recent announcement of Bitcoin, maybe that has something to do with that. Either way, a lot of juice being priced in to PayPal. I'm looking here, listeners. There are a ton of names we have the reports for this week. Match 116.78. They're popping off after the bell in the fourth. They're pricing in $12.10. In the past, they moved about $12.50. So pretty much in line there. All of our line in the sand put friends, though, maybe want a little bit of quieter earnings out there. And then Qualcomm, 123.36. They're also on the fourth after the bell. They were pricing in $7.77. In the past, they moved less than $5. So a little bit of juice out there. I know, James, you like to look at large indices and products like that. Does earnings season factor at all into your trading over there at Hercules? And if so, what names are you watching, sir?
It normally would, but earnings are overshadowed by a check we need written to save this economy, a decision we need to know as to what our tax scenario looks like and who our president's going to be. And then, obviously, the pandemic. We don't know when we're going to be able to come out and it'll be safe. And so normally earnings would matter, but given those factors, any earnings announcement has to overcome those challenges. And we've seen that with some recent announcements lately. And so we're really not paying too close attention to earnings in as much that we want to know what's coming 6 months from now, 12 months from now, and there's just too uncertainty. What I was particularly interested in looking backward was the loan loss reserves from the banks. Banks understand a lot about economic cycles and about consumer spending and about consumer debt and credit. And JP Morgan's earnings, I know this is in the past, but follow me here. JP Morgan's earnings announcement was accompanied with a loan loss reserve increase that was 25% higher than what they had anticipated. And so that was a very bearish look for us. It doesn't matter what a company's earnings are right now because this economy is at risk of going off the side of the mountain.
You know, that certainly is the case. That was the case a couple of cycles ago, too. It seemed like it, and yet the market shrugging off a lot of otherwise dire news going into the Q1 reports and even Q2. So it seems like the market has a surprising ability to shrug off dire news. Let's see if we can find ourselves some interesting news, though, as we head right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
Everybody, let's do it. Let's get weird. Let's get wild. It is time for the Odd Block, the portion of the show where we unleash our Eye of Sauron into the markets and see what it brings back for us. It's like a very savage dog that brings back all sorts of interesting, sometimes dead treats. I guess we'll find out. First off, we've got, this looks like a newcomer to the Odd Block. It isn't. We haven't talked about it in quite some time. This is Global Payments, Inc., ticker symbol GPN, trading today 159.64, up about $2 or about 1.25%. So a decent day out here for GPN. A year ago, its name was trading about $169, so almost exactly $10 north of where it is right now. And then it kind of rallied up to about 208 and 209 and change or so right before the big bad day of February 20th. And then, of course, we all know what happened after then. It sold off pretty hard. This swing took pretty much a 50% hit. It got down to about 105.5 in the Great Nadir. Then it almost immediately rallied back. People realized, hey, people still have to pay for stuff. And so it got up to about 152 by March 26th. Then it kind of sold off again down to 126 in April. And then it rallied back up again to guess when, listeners? June 8th. Yep, that's when it hit its recent high of about 189.78. And then it kind of sold off again very aggressively down to 160. It flirted with that June 8th level a couple more times. In September, it got up to about 184 and change. It got close, but obviously now it is well off that level, back down to 189, where we find ourselves today. What did our Eye of Sauron find for us today? Well, it looks like it might be Mr. Rock Lobster. Dare I say it? Perhaps your favorite trade, the line in the sand put trade. This time coming in on the NOV 140 puts, going up 8,241 times for 95 cents, a nickel off the bid. So they actually got a nickel to go up nearly 8,300 times. So that's not bad. not bad execution out there. Worth noting, our friends over there at Orats also noted this one on their high options volume scans today as well. They said GPN actually had the highest. It was their number one of today's volume versus their 20-day average at about 4x. So this one was number one on their radar as well. They said the normal average volume was about 2,300, and as of their report, they had traded over 9,200 options. Obviously, most of that coming in this one print. So, Mr. Rock Lobster, let's kick it off right. You like this type of trade. What are your thoughts here on these NOV 140 puts going up a nickel off the bid, 8,200 times, about 20 handles below where the stock is trading here in everyone's favorite name, Global Payments, Inc.
This is one of our, we're having this huge windstorm, and I'm getting no live data in any of my applications. I was just trying to pull this up.
That makes it easy.
It does make it look more interesting. I think this is a line in the sand put. I actually tried some line in the sand puts myself today. In Wells Fargo, I figure I really haven't. I haven't gotten my teeth kicked in too much by that one, so I figured, what the heck. But it does have all the look and smell and feel of a line in the sand. But plus, look at how all the payment stocks are doing. Like PayPal, isn't PayPal like a top 20 market cap stock now? So, why not? I guess apparently people have to pay for stuff. They're stuck at home, but they still got to pay for stuff. So maybe this is the way they're going to do it.
Yeah, people still need to buy stuff, and they're doing it increasingly online. So a payment service like this certainly looks like it could be a decent bet, and looks like the market agreed with that, turning it around pretty quickly after its big March sell-out. I'm going to put this in our to-be-watched category. You like yourself a good line in the sand put, Mr. Rock Lobster. We'll come back to this one. Next up, we've got another one. We haven't talked about this one in quite some time. This is good old ING Group. You know them. They're the Dutch financial services firm out there. I remember seeing all those guys in those orange jackets back in the day on the CBOE. They were all over the place, the ING guys. Trading today, $7.11, up about 30-odd cents or so. This is the name that a year ago was trading $11.60, so a wee bit north of where it is right now. Then it took it on the chin back in the Great Nadir, got down to, about $4.50, and took its time rallying. It rallied all the way up to $8.19. You know when that was? Yep, June 8th. That's when this name topped out as well. And then it sold off again pretty aggressively. It's tried a few times to get back to that level of June 8th, and looks like it briefly succeeded at that in early to mid-September, got up to about $8.40, and then it gave it all up again, and now we find ourselves at $7.12. A decent day, though, up 30 cents. So getting a little bit of a lift today, up for almost 4.5%. What did our Eye of Sauron bring back for us today? Looks like a little bit of call paper, maybe a little bit of call love here. NOV 7 calls, so now in the money. I'm sure when this trade was planned out, they were out of the money. The stock has rallied 30 cents just today. 6,000 lot of the NOV 7 calls going up for 42.5 cents, so 2.5 cents off the offer over there. This was crossed on, looks like the ISE, so one of the many exchanges in the NASDAQ stable over there. Worth noting, they do have earnings coming up in just a few days. These are on the 5th, these earnings. So there are some events in the near future for this name. Mr. Rock Lobster, what do you think about what looks like some crossed call love here in good old everyone's favorite orange jacket name, ING? Did you ever trade next to those ING guys?
Have I did ever? No. I always seem to think of ING as that big Dutch bank that always just ran into troubles with stuff. Or always like derivative-wise, they just always had, I don't know.
I believe they had some issues over the years, yeah.
Yeah, ran into trouble. I would just say I've seen a lot of financial paper, like especially in Wells Fargo, crazy call buying. PayPal, the same thing. Immense call buying. I don't know what the heck they're expecting. I would say, yeah. I mean, it's just straight up call buying. I mean, they don't look terrible. There's a lot of these stocks that are like GE and Ford and GM that just are not. They're not very high prices. The market has totally forgotten, 80% or 80% of the stocks out there. I think you guys were alluding to it earlier about how everything has been tech, and they've just been leading everything, right? And James was talking about that. Everything else has been left in the dustbin. So anyway, I think there bargains out there. I mean, if you're a long-term bargain investor, I mean, is the growth going to be in ING? Probably not. But just the stocks are cheap enough at this point. I think and that's why anyway today, just call buying everywhere in the financials. So yeah, I don't think this is an unreasonable trade by any stretch. Long story short.
Yes. All right. We got one more here. People like I might table this one just because we're kind of coming up against it. We'll save this one. This was a review from October 1st. We'll come back to this on our next show because I know a lot of you are chomping at the bit. It's Monday. It's Uncle Mike Day. It is time for a little bit of the old strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody. It is Monday. It is the final Monday before Election Day, which means it's the final strategy block before what is potentially, and if you listen to Uncle Mike at the top of the show, sounds like he's buying into potentially the largest volatility event of an already tumultuous and volatile year. Mr. Uncle Mike, sounds like you said at the top of the show you're leaning a little bit overhedged. Dare I say perhaps some short deltas heading into this election? Why don't you break that all down for us, sir? What are you up to?
Okay, so normally in speaking with my our hedge strategic night, that we haven't changed. That's one that we haven't touched. We're doing the same stuff we always do. We were able to capture some profits earlier in the year when the March sell-off. But for the larger money, we're not doing anything with. In the aggressive strategy, though, what I'm doing right now is normally the way I would run the aggressive strategy is I would have some type of long delta, long premium call option going, whether it's just simply a call option, call spread, diagonal spread, whatever the case may be. I usually have something like that going, and I do right now as well. I have an out-of-the-money long call spread, and that's in case we do have a major rally, and that's likely going to always be the case in the account, unless the market goes negative on the year, which that's my time to get out. And so right now we're right on the borderline of the markets where they were at the beginning of the year, so who knows what could happen tomorrow. But with that being said, how do I protect that from a downturn? Well, sometimes what I typically like to do is be pretty nimble. If the market goes higher, maybe shave some deltas off the table by selling a shorter term call spread. Market goes lower, maybe get a few more deltas on the table by selling a put spread or something along those lines, to where I'm not just out there with a long call or a long call spread and just letting the time decay have its way with me. Unless, of course, it was a couple years ago when we were having 9 VIXs, then, well, I wouldn't really worry about it quite as much. But that was a different world. So in terms of what I'm doing going into the election, I'm concerned that we could have something major to the downside on this. And so with that being said, just simply selling a call spread, even though my deltas would be down or in the levels with which I would want them, if the market goes down with a significant chunk, then it's probably not going to end well if it goes down far enough. And so what I'm trying to do to hedge myself off, and I can't get into specific positions, but what I'm doing in lieu of selling short call premium or call premium-esque type of strategies, I'm actually buying pretty far out of the money put spreads right now. I'm preparing for a large downturn in case that does actually happen. And with that, who knows if it will? And I'll be honest with you, I seriously hope it's a waste of money. And I seriously hope that I'm behind the market a little bit, or behind where I want to be after this election, because I wasn't as bullish as I normally would, just because of the fact that I know that if I'm a few percentage points behind my goals, I can make that up. But if I get totally wiped out, then I can't make that up, so to speak. So what I'm doing going into this election, we'll see if I'm right. We'll see if I'm wrong. If the market goes way up after the election, then I will, I'll be profitable. I'll be ahead, but I'm not going to be near as ahead as what I would normally be in a major run-up. So with that being said, what I'm doing for my hedges at this point in time is I'm buying further out of the money short-term put spreads in case we do have a major downturn on election night. I mean, I'll never forget 4 years ago, just watching the futures at night and seeing them just tank right after Trump was elected. Now, of course, it didn't stay that way, But there's a lot of things that could happen, and there's a lot of surprises that could happen going into this. Now, in reality, you could also say, well, no one's going to be surprised by it, so why are you bothering with it? Maybe the market already knows. Maybe it does, maybe it doesn't, but I really don't want the market to drop 20% and not be prepared for that. So that's what I'm doing right now going into the election. Still have a few things I'd like to see tomorrow because I'm obviously more concerned with election night than election day. But for the time being, I think it's better to err on the side of caution going into this election. And that's my strategy right now.
All right, and it is Monday. We usually say these for Thursday. We've got a little time. Let's see if we can squeeze in a few of you with a quick edition of the Mail Block.
It's time to take your seat on the All-Star Panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. Let's see how many of you guys we could squeeze in. A lot of you guys listening to the shows via YouTube these days. However you get the show, we don't judge. If you like it that way, we like to put it out there with some nice static images. Obviously, it's not a video program, but you get some nice static images. We all know most of the uses and on the quote-unquote views on YouTube are listens really anyway. So a lot of you liking it, including Scott Somer. That seems to be his preferred way to listen to the shows these days. And he chimed in, I believe, this is our episode we did with Magnum PI, episode 944, Fast Cars, Sweet Mustaches, and Volatility Dispersion. That certainly sounds like a Magnum episode, a.k.a. the one the Rock Lobster missed because that was done up for him. Scott wanted to know, did NASDAQ reopen its Philadelphia physical trading floor? That's a good question there, Scott. You know, it's interesting. Obviously, NASDAQ spent a lot of money revamping and relaunching their old Philly. Remember the PHLX? It's kind of forgotten a lot in the conversation of the options trading floors. Obviously, SIBO gets a lot of the thunder because that was the kind of the big dog, the originator of the space. And other ones like the PECOS pop in there and the Amex. But people always forget about the Philly. It was one of those other physical floors out there. Now, of course, it is part of the NASDAQ exchange group. They have about 6 options exchanges under their umbrella. They revamped it and kind of relaunched it almost as a bit of a fintech hub a year or two ago. But I haven't been back down there to see it. And, of course, 2020 prohibited any of that as well. But that's a good question. Obviously, they shut down like everyone else did back when all of the industry went electronic earlier in 2020. I do believe they were scheduled to reopen in June. Then they postponed that because of some of the unrest that was going on in Philly and other major cities. Chicago certainly had that as well. I do believe right now they are in what's termed, at least as of a few weeks ago on October 19th, they were in what's termed Stage 3 open restricted. So it sounds like they are open, but on a limited capacity, and they're not requiring you, if you take public transportation, you can take it now. I guess that was even prohibited before. No public transportation to get to the floor. And you can stay in a hotel. You used to have to require a self-quarantine if you even stayed in a hotel. So they were pretty restrictive on it. It seems like they have loosened that a little bit. So it sounds like right now the status there, Scott, is Stage 3 open restricted. So I hope that clarifies things for you over there in Philly land. Now it's time for us to clarify what we're watching for the rest of the week. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is the portion of the show where we tell you what we're watching for the rest of this week. It's kind of hard to get much beyond Tuesday, I think, for all of us. There is kind of one huge question mark on the horizon coming up tomorrow. Then afterwards, who knows? But that said, James, you are out there adjusting and managing a lot of different positions over there at Hercules. What is on your radar? What are you fixating on for the rest of this week, sir?
I got 5 on it. I got $50 million strangle on this U.S. presidential election. We don't care who wins, but trillions and trillions of dollars do. And when you have a candidate that potentially may go away, you got to hedge your exposure if you're in automotive industry or energy or trade or restaurants or any number of industries have trillions of dollars at stake. And when a decision is made, the hedges for those exposures come off, and you get a big wobble, just like you do, or like you used to do when the Fed made its decision, just like you used to get on GDP. When big news comes into the market, regardless of who wins, there's going to be a big wobble. We saw this when Hillary was supposed to concede by the tune of 7%. And so we're throwing money on both sides of it. One will get put to zero, and one of it will fly, and we expect to take a healthy profit from that. That's all we care about this week is owning that spike.
Interesting. A size strangle on there outside of the election, or I should say around the election. Interesting stuff. A lot of people are looking for a big move post-election, so kind of hard to argue with that outlook. Mr. Rock Lobster, same question for you as you're dodging the hellacious windstorms on the coast of Maine there, sir. What is on your radar for the rest of this week, at least until we can gather here tomorrow on the live election night special?
Oh, that's right. We have the live special. I think I have the 8 p.m. Eastern time for people that want to make fun and heckle.
And send in more theme songs for you to miss.
Exactly. I'm worried. I was worried if you guys sent in the Mork and Mindy theme song. I don't know if I could remember it even had one. Election. That's it. I mean, and I agree that we could move quite a bit. I still think vol comes in to some degree. I kind of like the short vol, like short market type trade. For me, that's kind of my bread and butter trade, and it looks like it could set up okay. So, but that's what I got, and I'm kind of waiting around. I haven't done much today except for mess around with the financials a little bit, just selling puts basically, and we'll see what happens.
We'll see what happens indeed. We shall see it happening live tomorrow night. Looking forward to it. And last but certainly not least, Mr. Uncle Mike, sir, what are you keeping an eye on as you are super overhedged to the downside for the rest of the week, sir?
Well, with that, just the election results and the news. I mean, this is a time to where I think you can throw technical analysis out the window. You can throw fundamental analysis out the window. This one's all news, in my opinion, as to what's going to happen with the market. So watching the news, seeing what happens, and doing my best.
Indeed. Doing his best. And we're doing our best here to keep you engaged, informed, maybe ever so slightly entertained out there in the world of options. Unfortunately, that music means we've come to the end, at least of this specific leg of our journey. If you want a little bit more in your ear holes, stay tuned. We'll be back in a little bit later today with Crypto Rundown. Had to adjust some things due to our guest schedule. We'll be back at 3 p.m. Central as opposed to the usual 2 for the Crypto Rundown. If you're listening live, just stay tuned. We'll pump some good stuff in there for you guys to enjoy. And we'll be back with some good stuff, breaking down all the hot happenings in the world of all things crypto, the vol, the volume, the skew, the volatility, all that good stuff. And spoiler alert, there's a lot of it. So it should be pretty fun. So stay tuned for that. Of course, stay tuned for tomorrow night. Our big live election night special will be coming at you pretty much via the same link that you're listening to us now on. So grab that Mixler link. We'll see if we can add a few others out there to maybe make it even easier for you guys, but definitely via the Mixler. So starts tomorrow, 6 p.m. Central, and goes till, who knows? If you listen to Uncle Mike today, maybe we'll be going till 2 a.m. Who knows? And that's a lot of talking for me, but we'll see. We'll see what we can do. Either way, we'll keep you politics free. We'll just talk about the impact of the returns and how they're impacting the markets. No he said, she said, this candidate's good, this candidate's bad. None of that nonsense. You can go elsewhere for that if you want that. Here, with just the facts. Man, speaking of just the facts, if you want the facts on all things VolQ, you know where to go. NASDAQ.com/VolQ, VOLQ. That's the place to go for all the information, all the data, and learn how to trade this thing if you want to get out there and start slinging the futures. And speaking of slinging the futures, sounds like he's ready to do just that. Mr. James, if folks are intrigued, they want to hit you up, maybe about VolQ, maybe about your strangle about the election, or maybe just about what you guys are doing at Hercules, where should they go? What should they do?
Thank you so much. HerculesInvestments.com. You'll find us.
There you go. Nice and easy. HerculesInvestments.com is the place to go. Ask him how close he is to that NFL franchise. We'll find out. Speaking of NFL franchises, maybe someday he wants one as well. In the meantime, Mr. Uncle Mike, sir, where should folks go if they want to reach out to you?
stcharleswealth.com. I'm a financial advisor who likes to hedge and is trying to prepare as best he can going into tonight's election. And tomorrow night, folks, listen to this show. This is possibly going to be the best show that we have ever done on this network, in my opinion, because we're actually going to discuss politics without leaning one way or the other. Try and find that anywhere else. I dare you.
Yes, we will do what every other out on the planet claims to do. We shall try to be as unbiased and down the middle as humanly possible. And, of course, he's full of bias, but we talked to him anyway. He's the rockingest of lobster. Mr. Rock Lobster, if folks are intrigued, maybe they're just concerned about your status in this windstorm, where should they go? What should they do?
Well, go on. Yeah, they should. Let's see if I survive till tomorrow. Go to optionp.com, look at memberships, look at Mark's cool new Little John product, and checking out all that flow and momentum coming from the Robinhood world. So, and just learn how to trade options. We do from beginner to advanced or fund people, fund managers, portfolio managers, investment advisors. So come on over and check us out and, put 30 years of option trading to work for you.
There you go. Put them to work for you, at least when his quotes work. That's over there at optionpit.com. And on behalf of myself and the Rock Lobster and Uncle Mike's and James holding down the NASDAQ hot seat, I want to thank all of you out there for downloading, streaming, subscribing, for listening live, for sending in such great questions. Keep them coming. Remember, we'll see you back here, special time, tomorrow night, 6 p.m. Central, for our live election night special. So stay tuned for that. And then we'll be back to break it all down again on the Thursday edition of the Option Block.
The Option Block is brought to you by NASDAQ. From its inception, NASDAQ has been an innovator and agent of change in the financial markets. It's in our DNA. From the development of electronic trading to our drive to bring enhanced functionality and world-leading technology to our suite of 6 options exchanges, we exemplify customer focus, consistent technology, and streamlined solutions. Now NASDAQ is proud to launch the NASDAQ 100 Volatility Index, ticker symbol VOLQ, to its suite of exchange indexes. VolQ uses only at-the-money options to provide a precise measure of NASDAQ 100 volatility. Learn more about this exciting new volatility product at www.nasdaq.com/VOLQ. NASDAQ, leading the U.S. options market and continually rewriting tomorrow. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.